the broader capital markets have been volatile especially in the last few weeks. What we've seen with closed-end funds, like we always do in these periods, are that discounts widen during these periods. Most closed-end funds use leverage. Leverage amplifies the price movements, and plus most closed-end funds are equivalent to microcap or small cap stocks, which tend to be more volatile than larger cap stocks. So yeah, it's not a surprise to see the discounts widening as their share prices drop faster than their NAVs.
Now let's talk about the investor response. How has the investor response been? Has it been similar, or would you say different from what you've seen historically?
The interesting thing about investors' response to broader market volatility is that almost every single time we see heightened volatility in the markets, it's the same exact response. Investors, when they own a closed-end fund and they go to sell it, they might know that it's relatively illiquid, but they're not thinking that, well, the bad news that's in the marketplace may already be discounted in the share price. They're just thinking, I need to get out. And so everybody's racing for the exits at the same time. Now, I mean, when I say everybody, I don't mean everybody. A lot of closed-end fund investors are long-term investors. Over time, if you're a long-term investor, you should get a return similar to what the portfolio manager is achieving. Closed-end fund investors who are trading in the market and just want to get out of the volatility, they're not thinking about that.
In the context of the overall year, where does the recent volatility leave the closed-end fund market, and what's the outlook, in your opinion, for the rest of the year?
So throughout 2015, what we've seen with closed-end funds is the discounts have been widening all year. It's just in the last couple of weeks that they've really gotten noticeably wider suddenly. But it's been a slow drift, whether it's a leveraged municipal funds or leveraged taxable fixed income funds, or whether it's even equity funds. I think it has a lot to do with investor anxiety about what's going to happen with interest rates and how that might affect their holdings.
Any parting suggestions for investors based on your past experience with volatile markets?
The one thing about investor behavior in volatile markets is that it's kind of like they're their own worst enemy, unless they're the long-term buy and hold investor who just ignore the volatility. And that, I think, is the best advice. It's one thing to say it, it's another thing to actually have to do that. But when volatility starts to spike, and as long as the underlying strategy of the fund is still pertinent to your portfolio and your investment strategy, then we just need to be patient.
For more information and data on closed-end funds, visit our sponsor, cefconnect.com, the authority on closed-end funds. This is Closed-End Fund News.